Welcome, everybody, to another episode of Beyond the Case, which is a podcast where global leaders from Harvard Business School's OPM community join in a personal capacity and they share the real decisions, failures, and mental models which go behind building enduring companies. My guest today is Eric Hoffman. He's the chairman and CEO of Hoffman Media LLC, which is a second generation business, and he's transitioned into the business after spending time in investment banking, bringing both his operator and his capital allocator perspectives. So Eric, it's a pleasure to have you here. Welcome.
Terrific. Thank you so much for having me.
So Eric, do you just want to introduce your company, tell us about what you guys do?
Yeah, absolutely. So, Hoffman Media was founded actually by my mother, originally in 1983. The roots of the business is in consumer magazines. And, flash forward to where we are today, it's a diversified media company. We've got 8 consumer magazine brands that now make up only about half the business, actually. So the other half is being driven out of now book publishing. We launched a book publishing imprint a few years ago, and we have a pretty robust consumer events business. And so we've got about 110 employees, and I'm the second CEO in 40 something years. So big shoes to fill.
Oh, that's incredible. Any employees who are still with the company and were there since the time your mother founded the company?
You know what? We had our longtime business manager who just retired about a year and a half ago, and she was there the entire time. My mother passed away in 2023, and so she was there through the entire period. And then there was a natural sunset where she was going to retire. Yeah, we've got several employees with longevity. We've got still one over 30 years. We've got several 25-year, 20 years. So it's been fun to see. And I've been with the business almost 19 years.
Well, may she rest in peace. Talk to me about what it felt like growing up in a family where your mother was an entrepreneur, and how did that shape your mindset about risk and about responsibility?
Sure. It was interesting. I grew up like kind of around the business, but think of it as, mom would drop us off at school, mom would pick us up from school. And it wasn't until I was much older that I came to appreciate what she really was doing as an entrepreneur. She would get work done during the day. And then, when my brother and I would go to bed at, 8, 9 o'clock, she would stay up till probably 1 in the morning, doing work. And so as a child, I always sort of saw her as just kind of mom, but spent plenty of time running around the office as a kid and seeing kind of what she was up to. But she was amazing in that she had this gift of being both on one side former CPA, so business acumen, but also like really creative. It's an interesting dynamic. My twin brother and I actually, I think, kind of broke that apart. I'm more of the business guy and he's kind of the creative guy, which is a perfect partnership. But she was interested in kicking the walls out and serving customers and finding new markets, that were being underserved. And so our first magazine, interestingly enough, was for cross-stitching enthusiasts in the early 80s. Hand hobby, craft, sewing, quilting, knitting, all these things were kind of underserved. And so she saw an opportunity to launch a publication because she was a hobbyist herself. And so she pursued her passion and kind of married it up with a business. And then she did some bold things. I mean, like she went in, I'm going to say the late 80s, early 90s. She went straight to Disney and pitched them on a licensing deal to get cross-stitching patterns for all the Disney characters. Small business, won the account, took off, and then she had an opportunity to actually sell the business in 1992 to a private equity-backed media company. And so she went to work for them for about 5 years and was a group publisher, helped her understand kind of the broader landscape of the media industry. And then in 1998, she had the opportunity to actually buy back the 2 magazines that she had originally launched. And that kind of reformed modern day Hoffman Media. And so I'm finishing high school. I go to college. I went to the University of Alabama. I studied finance. The business was still small. I mean, if you think about where she was in 1998, 1999, it was probably 10 people, maybe a million top line. It was, just a small business. And I think when my brother and I were kind of getting out of high school, moving on to college, it allowed her to really then kind of double down. And so over the next few years, she actually brought in a retired Ernst& Young partner to be her CFO. In lieu of salary, he took equity. They went and raised about $6.5 million in private equity, did an acquisition, and then started funding organic growth and building out the leadership team. And so in a matter of 6 years, they took the company from the size it was to about 30 million in revenue, largely organic actually, which was fascinating. And so Hoffman Media is pretty unique in this business. Most of the players still around were all kind of put together through M&A, and most of the things that we own even today are actually organically launched, straight from just our creative people that show up every day. And so I had pursued a different career. I went to work for Ernst& Young out of school, similar to what she had done. Was in a consulting role and working out of Birmingham, Alabama, traveled every week, and I was sitting in Manhattan on a project where this hospital was issuing a bond. I looked across the table and I saw a guy that was about my age. I said, he's probably making 20 times what I make. He's the investment banker. And it led me to actually, I left Ernst& Young. I bought a one-way plane ticket to New York in 2005, and it was a good time to be interviewing on Wall Street. And so I got to go work for one of my mentors, a guy named Jamie Streeter, who was a great healthcare banker. He had run H&Q, which then became part of J.P. Morgan, and he had joined Susquehanna to help build the investment banking practice out. And I was the second analyst he hired, and so I got to jump right in on doing M&A and taking some companies public and just doing some really fun things. And it helped me grow up. I mean, I would have never been able to join the business out of school. It wasn't that interesting. And then I looked over and I realized I had some good experience, and we had private equity investors at this point and they were wanting to grow. And so collectively between my mother, probably a lot of pressure from my mother, but also with the investor support, they said, look, we're going to hire a chief operating officer. Would you want to do it? And I said, sure. What's the plan? They said, oh, we're going to sell the business in the next 2 years. You can put that on your resume and you have a nice exit and you can go do something else. So moved with my, at the time, fiance, who I met in New York. I moved back to Birmingham, and we kind of did all right through like the recession. Got to remember, I knew nothing about operations. I was supposed to be there just to kind of be a deal guy. And then when the recession hit, the business taught me a lot about loyal customers and the stickiness of those relationships and how they can kind of get you through thick and thin. And so my mother always believed that for being a magazine publisher, we should focus on the right customers and not the most. And so it was really a unique model. Even today, only about 10% of our total revenue is advertising. Most of it is all direct consumer business. And so you think about people that are passionate about baking and cooking and, these interesting sort of niche hobbies. That's kind of what we built up. And she always was like, look, there's riches in the niches. Let's focus on the right people, not the most. And I think we learned at OPM that maybe she was ahead of her time, in a lot of respects. But so we ended up through that recession, we ended up having a great outcome. The private equity partner, allowed us to figure out a way to buy them out. And so we refinanced some debt, and then we ended up a couple years later buying out the equity. And so since 2012, we haven't had any outside investors, which is really amazing. So it's been a good run. And now I guess I get to think about the equitable case for a minute. I think about the CEO, and the comment he made was that this is the first time he got to be an architect. And when I sat back and realized that through my mom's passing, my brother and I, in a interesting way, were really given a gift because we didn't have to think about how do we buy out the first generation, what do we do there. So we've now got this opportunity, and that's really a big reason why I went to Harvard's OPM program, because I wanted to round out, at 44 years old, a lot of knowledge and experience, and learn kind of from our cohort about how I could be better and sort of drive the business to the next level.
You started off in investment banking, but your mother was a builder at heart. She was an entrepreneur. And so, two different skill sets. Do you think your experience with taking companies public helped you somewhere reach at one point where you could buy the private equity investors back?
Yeah, no, absolutely. I quickly was put in the role, I guess, with the family business of sort of being the go-between, if you will, with like the private equity firm and like the family business kind of with the board. And so I would always sort of be, you know, talking that language. In fact, I actually just this last week had dinner with the partner that was our former investor who I had not seen since 2012. And so I realized that it'd been a while, and I was probably, young and maybe a little prideful back then, um but we really did a great job. We performed very well for their fund over 8 years, even taking them out the way we did without having to sell the business. They had an annualized IRR of 27% over an 8-year hold. So they were, super enthusiastic about the outcome. And at the same time, they understood that we were going from thinking of it as a job and an exit to a career and a family business that could have, to perpetuate. And so that was very generous on their part, to work with us through that. But Yeah, it gave me the ability to think about, deal structure and how to finance, things like that. And we had since done a couple of acquisitions after we took them out. So I think that mindset, definitely helped. I recommend, for anyone that's young, if they get the opportunity to do consulting or investment banking or something, um, you know, whether you, regardless of sort of the what you learn, the experience of sort of being there and the character building and the formation kind of in and around that earlier career, I think really was an advantage I got.
Was there a moment at which you felt the business was no longer a founder led business and you had owned it as a second generation business?
Yeah. So if you go back to, I'm going to say 2014, 2015, I got named president of the business,
Mhm.
which was a big momentum, shift for my mother to be able to say, look, I'm ready for you to take on more. She still was chairman and CEO, but she started to, really trust kind of what we were doing. And in fact, she was big on letting us make decisions, even if she maybe at some level was against them, because she believed in us learning from our failures, our past failures. And so she gave me a lot of latitude, and I got to go and make decisions, and some worked and some didn't. But it started there, and then, my mother, starting in 2017, 2018, she was, diagnosed with a bone marrow disease, and so by default, she started having to pull back a little bit from the business, and so served in that role. It's actually a really special moment. April of 23, before she passed away in July, she and I were actually having a meeting, sitting in the conference room, just the two of us having lunch, and, I was like, "Mom, I wanna do this, and I was thinking about this, and I don't like the way this is going. We need it." And she just stopped me and she said, "Look, you're ready." And I said, "Ready for what?" And she goes, "You're ready to be the CEO." And I came to appreciate, in July when she passed, that she was very much in touch with her mortality, and she really wanted the business to have continuity and a succession plan that people could see and be a part of, and that I was able to sort of, spend those last, couple months with her in that capacity. So I would say that, there was a transition, but, I got super excited about, taking over as president in 2015, and, we were able to, really start, impacting some change in the business. So it was fun and very rewarding, and, she was mother till the end though, right? She wanted to take care of us and Hoffman Media as a family, right? All of us are really in the family, whether you own part of it or not.
You spoke about succession planning, and that's something, of course, we studied at Harvard as well. Was the succession planning at Hoffman Media formal, or do you think it was something which your mother conceptualized, but over the years she had the opportunity for to train you and maybe your brother to step into her shoes as well?
Yeah, she she was always a little unclear on, like, what retirement looked like, and I think with founders, you see this a lot where it's their identity, right? It's who they are, it's their baby, and so, we would have these discussions, and we really could never articulate sort of what that would look like, but along the way, my brother and I were able to buy a little bit more of the business, at each iteration, and so we owned just under half the business before she passed away. We had a meaningful stake in the business, and so she was all about us kind of, you know, being a part of the partnership in a bigger way. But no, it was always sort of left a little unclear because she said, "Well, if I sell, like, well, what am I going to do?" And so she kept thinking of herself as someone that wanted to be involved. She was a creative force, really spent more of her time on the brand and creative side of our media assets, those last several years. And so she always kind of saw her role sort of driving that and building up the experience of our editorial staff and helping them shape the vision for what the brands are. So, I think that was going to be her game plan. And, wasn't ever really clear how we were going to buy her out. But, anyways, ultimately, I guess, right or wrong, it worked out.
Eric, what is something that people misunderstand about being a second generation business owner?
Man, I find myself 19 years in feeling like I probably know less than I knew the day I got here. So I came in, thought it was on top of the world, Ernst and Young, investment banking. I'm here. I'm confident. Let's get going. I really knew nothing. And I think 19 years in, what I've learned is that, one is the CEO's number one job, I think, is the right people in the right seats doing the right things. And so it's taken me a long time and I've gotten better at it. And actually, leaving OPM, a lot of the people classes resonated really well with me because one of the things I wasn't really good at is providing feedback. And, after doing the Parsons case and a couple other cases, I started recognizing that, we really do undervalue that informal feedback and overvalue formal feedback. And so since I've returned, that's become a big priority for us. We rolled out like a people analyzer, and it's really in light of all of our core values as a business. And so I'm starting to be able to, in a constructive way, look at the people in the organization. And we've made a few changes since I've been back, and it's not always easy, but we're getting more disciplined at that. And so that 19 years in is actually still very new to me. I think that, being the visionary and being the leader for the business, and yet also continually learning, I think is kind of a very important, part of at least my journey.
Was there a principle that your mother lived by when founding the business that still guides you today?
Yeah, people ask what we do, and if you break it down to its core, we enrich people's lives. And it sounds so simple, but in a world where media is crazy and you have AI and you got all this kind of shock culture with what's going on and people don't trust news anymore. I mean, all this stuff. She always believed that like if we were in this area of the media world that served people's passion and interest, it was uplifting, it was inspiring, and it helped people pursue their passions. And so that's really kind of been what we've continued sort of as her legacy is to say, look, our job is we want to enrich people's lives. And how do we do that? We do that through our print magazines. We do it through experiences. We take people all around the world on these like amazing retreats, and we publish, quite a bit of cookbooks and lifestyle books, but it's all positive. And so it's a fun business to be in. Uh, and so that's really been a big part of kind of keeping to our core is how do we do that and do that better.
What made you consider OPM?
I think I shared this with you, but right after we bought our private equity guys out, I applied for the program, I think in 2013, and I got in, and I had a like a 4-year-old and 2-year-old at the house. And I remember my wife being like, "Oh, you're crazy. You're going away for 3 weeks, 3 years in a row." And so anyway, long story short, I ended up kind of passing on it. But I always had in the back of my mind, and as it came around, this about whatever year ago, I decided to apply again. We had been looking at actually a potential merger with another media company, and I was going to take over CEO of this larger business. And I kind of told myself, I was like, look, I'm going to apply to this program, and like if we end up not pursuing or closing on this deal, um, I'm going to do it if I get in. And it was awesome. I think things work out for a reason. But when I showed up and I realized that the cohort, I mean, average age was 44. We had 45 countries represented, 152, I think, was in our program. And I just recognized that being there specifically in OPM 67 with our group was perfect timing for me, and I just felt like that the relationships that we formed, um, beyond the class, beyond the case, really was so powerful. And I think the learning and the takeaway value for the program, I've told plenty of people, it was like it's absolutely worth it. It is a big time commitment. There's a lot of pre work. You get there, and it's pretty intense for 21 days. It allowed me, I think, to leave there and come back and really sort of set a new tone. Maybe is kind of the right way to say it, and it wasn't out of, oh, well, I've been at Harvard. It's more like these are real learnings and findings that I've discovered that I think are impactful to our business. And so I was hoping that would be the case when I went, but it's really shaped a lot. I mean, we one of our core values was customer first, and after DAS's classes, we changed that core value to make the customer a hero. One of the fun things we did actually in December, we did a town hall, and we not only announced that, but we promoted someone in the business to be our customer hero officer. And so somebody that's going to sit on top of all of our customer service. We've outsourced customer service for quite a while because being in a transactional subscription business, we have, several 100,000 customers. And so it's a big bet we're making, but we're going to in-house customer service, and we've got someone that's going to be there every day. The idea is to delight our customers. Not, think of the, Oberoi Hotels case. I think it's a pretty impactful case we went over. Taught me a lot about anticipatory service and how you delight your customers. And so we're working through a lot of those things, but, that was a quick takeaway. We're building on sort of the new way of working from the Equitable case of how do we do things differently. And, we're going back to having teams come into the office more to do cross collaboration, setting up new goals. They're aligning incentives, compensation against team goals instead of individual or just company wide. And so it's been fun to, really start, establishing a few things. There's a whole lot more as you leave. You're you're a little overwhelmed. You come back into the real world and you're like, all right, I've been on campus for 21 days and I have all these learnings. You know, here's my Harvard diary. I say it sits beside my desk every day. No shortage of notes and takeaways to continue to work on.
How do you think about balancing growth, community involvement, and family at this stage in your life?
Yeah, um, I think again one of the takeaways from the Legos case specifically was growth itself is not a strategy, and so we've really going into 2026 we've been pretty disciplined on trying to look at our core competencies and understand sort of where there is growth happening sort of within the business, but understanding how we want to do things with not necessarily just a growth only mindset. And so that's been pretty powerful. I'm a big believer in giving back. I serve on several civic boards. I'm the board chair actually for the Ronald McDonald House Charities in South Louisiana, and serve on my daughter's school board. And I do find that it's enriching to, despite how busy we may be, to dedicate some time to give back and impact people's lives. And had a guy here in New Orleans by the name of Cleveland Powell. He's a legacy here in New Orleans, and he's been on probably 50, 60 civic boards. He shared with me Winston Churchill's quote that we make a living by what we get, but we make a life by what we give. And I remember that resonated so well when he told me that. And so I've sort of found myself trying to have a spirit of service. I think my family, I've got a 17-year-old and a 15-year-old, and I'm seeing now them in some form or fashion starting to do the same thing. My daughter, through her school, has been doing this um, charitable babysitting thing to raise money for an organization with her school, and so it's just been fun to see. But I think that you can work as much as you want, but the reality is you gotta balance it. You gotta find time to be with your family, and we fortunately, I think right now have a pretty good balance of that. And so it's a precious time. You look up and next thing you know, your kids are son's a junior in high school. He's got 1 year left and he's gonna be gone. And so you start counting down those weekends and time you have together. It's precious.
Eric, I want to go back to something you mentioned from the moment when you all bought the private equity company out. I was speaking to someone yesterday who had private equity investors. They've now grown 9x in valuation. And while it's tempting to buy back the business, it just seems absurd to pay 9x the price that someone got in at. So just walk us through your mindset on, if your private equity investors made 27% IRR, which is incredible, for you to take that decision on buying them out and saying, hey, I still believe there's a lot of runway left in this business. Can you walk us through that mindset on how you were thinking about taking that decision, how you got to that conviction, and maybe whoever got that conviction got the family behind it and has seen that through to success today?
Sure. Their structure was interesting because they basically were a mezzanine debt lender and then had kind of work coverage in the business. And so the aggregate, they were still, I would say, like large minority. They were 40 something percent owner. And so we sort of did some financial exercises to figure out what was the multiple that we could pay or effectively between taking on some senior bank debt. And then I ran a process and actually sold off like one of our kind of, I would call it non-core assets. How I could sort of get the math to basically work so that it hit their requirements on their fund. And they actually invested out of their first fund in 2004, and they made an incremental investment in 2006. So by 2012, they had been in for quite a while and had gone through the recession with us. I would say that when you have the right private equity partner, and Scott Chappell was our board, he was on our board, and his firm, they very much believed in founders and entrepreneurs and family businesses, and so it was an amicable outcome. We didn't feel like we were overpaying. They got a great return. I think beyond that, I think it would have been more difficult. And they were also patient. I think that's a measure to me of a high quality investor, someone that's patient, understands market dynamics. And so we were kind of rode through thick and thin together. I think it paid off really for both of us.
Is there a book that has influenced the way you think or has stayed with you over the last few years?
I just finished the book 10x is easier than 2x. You could say that's the numbers and math behind what you want your business to go do, but it really actually is more of a personal development on how you find sort of where you spend the time in the business, where you're the only one that can do these functions, and how do you build up and delegate and elevate across the organization. So that's one. And then our company actually just prior to coming to OPM, we started implementing EOS, Entrepreneur's Operating System, and through that, we all read the book Traction. And so that framework for us, we brought in a business coach, and it's kind of helped us think about our company vision, 1, 3, 10-year long-term target. How do we break things down? How do we do the cascading messaging, and how do we start people in the organization each have their quarterly goals? And that's just a structure that we didn't have before. And so we're, trying to, learn to love our meetings, I guess is maybe the simple way to put it. But how do we align the organization better? Those are two that I definitely recommend.
I just have one final question for you. Is there any piece of advice you'd give to a younger version of yourself?
I wish that earlier on, I had asked a lot more questions and been a little bit more humble. I think that, you know, especially going into a business that, you really don't know, even though you've been around. So for me, I think that if I'd been a lot more inquisitive maybe earlier on, that'd have been one. And then, the other one is recognizing, that your people in a business, family business, institutional, whatever. I mean, they really are your greatest asset. And so building the relationship, I think, is important. And then my mother always actually told me for years, she would say, "You're doing a great job, but you need to be a better communicator." She would always tell me that. And so I tell people in my business that's been a challenge is I'm trying to do a better job of communication to the business. But those are a few things that probably would have benefited me earlier on.
Thanks, Eric. This has been a very pleasant conversation, so I do appreciate your time. And I look forward to seeing you in Unit 2, if not sooner.
Terrific. Well, thank you so much. I'm excited that you took this project by storm, and it's been amazing. I've listened to several of the podcasts. I got plenty of more now to listen to because you've done so many. Well, you're doing an awesome job with this. I appreciate you doing this. It's been fun to watch. I look forward to coming back. It's going to be exciting because this year everyone knows each other already, so we'll start day one already excited.